good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, yesterday we're taking a look at the budget and its out and some of the announced fiscal measures and other pieces of information that would form or inform rather investors' perspectives into the coming fiscal year and perhaps even further on into the future. Now, it was somewhat of an anticlimax in terms of some of the news that was coming out pre-budget versus what was actually announced, but still there were quite some impactful pieces of information. Let's take a look at what the numbers look like and what initial investor sentiment may be shaping up to be in the coming months. So let's take a look at overall the budget projections. Firstly, it may come as no surprise that revenues were a little bit on the low side in terms of projections relative to previous years at around 54 billion. Expenditures up just about 3.5% from the revised figures for fiscal 2023. Expenditures for fiscal 24 coming in at around 59.2 billion. That fiscal gap or the deficit has in fact widened to a projected 5.2 billion, which was in fact wider than that fiscal 2023 projection of 3.4 billion, and growth projections for the now concluded fiscal 2023 and 2024 are both in the vicinity of 2.7%. Now, will those growth projections be realized? Well, only time will tell. Now, taking a closer look at that fiscal deficit story, after running a modest fiscal surplus at the end of the financial year 2022 or fiscal year 2022, there was that decline or widening of a deficit once again in that fiscal 2023 period of 3.4 billion or 1.8% of GDP. And for that fiscal 2024 period, again, with those revenue challenges and relatively sticky expenditure, that is further expected to widen to about 5.2 billion or 2.7% of GDP in the coming fiscal year. Now, that deficit is going to be driven in some part by less rosy production outlooks, particularly in that natural gas space. Now, for years, we would have had projections of increasing production, which would have never really materialized. In fact, production has gone pretty much the other way in terms of natural gas production. And for fiscal 2024 and indeed fiscal 2025, the key point coming out of the budget was about stabilization of gas production levels at around the 2.6 billion standard cubic feet per day for fiscal 2024 and into 2025, 2.5 billion standard cubic feet. So certainly not the best news coming out for investors, especially those with exposure to the energy sector. In the longer term or medium to longer term, there are forecasts for improved production, but again, in the immediate term or short term, that 2024 and 2025 production forecast for natural gas is in fact one more of stabilization as opposed to any form of increase. Now, that is really what would throw some of the real GDP growth trends and projections into question in the minds of investors, with 2.7% projected for 2024, and again, with lackluster or relatively lackluster energy production on the domestic front, and some volatility in terms of energy prices, of course. And with the energy sector being a major driver of the Trinidad and Tobago economy directly, as well as with the spin-off effects, questions will be asked about those real GDP growth forecasts for fiscal 2024 and beyond. One of the other key trends to note coming out of the budget was the mention of the debt to GDP levels, or the adjusted general government debt as a percentage of GDP level, which actually increased in fiscal 2023 to 70.9% after decreasing to just around 66 or 67% in fiscal 2022. And with that widening deficit forecast for fiscal 2024, we may expect to see that debt to GDP level increasing in the coming months and certainly throughout the fiscal year, although the Minister of Finance, the Honorable Minister of Finance, did say that it would remain within the government's soft target of just around 75% debt to GDP level. So in terms of the broader investor considerations, and we're taking a very cursory view here given time constraints, some of the fiscal measures proposed, including the minimum wage increase, well, questions remain as to what impact that would have on the economy. It would certainly increase consumer demand for lower income earners, around $1.1 billion in disposable income or additional disposable income annually to minimum wage earners. going forward in fiscal 2024 once as these measures are approved. How will it affect investor sentiment? Well, that's a big question, given it's uncertain at this time as to what the business response will be, whether there will be higher prices and inflationary pressures, or whether it would just eat into profitability margins. Certainly from the private sector, who would have to absorb some of those higher costs in terms of that increase in minimum wage. Property tax implementation, again, a question mark on the economy. Consumer demand would be down, given that it's taking spending power away from consumers and being reallocated rather into additional revenues for the state and the regional corporations or regional bodies, etc. And again, question marks around investor sentiment, or not really too many question marks, but with that lower demand, investor sentiment may be a little bit lower, given that the spending power is ultimately coming out of the hands of consumers. Future tariff increases, while there were no concrete measures announced for fiscal 2024, the continuing conversation of future tariff increases will again impact consumer demand in terms of lower spending power, and that may weigh certainly on investor sentiment going forward. And of course, the domestic energy output equation and story right now, probably a negative for the economy, given the very muted production outlook. Certainly with the spin-off effects becoming absent, there could be a lower consumer demand. And of course, at a macro level and at the consumer level, that would definitely be on investor sentiment, perhaps with a lower or less than rosy forecast in the coming months ahead. Well, that's it for this week's edition. And if you'd like to get much more details on the investor perspective for the budget, well, you can join our webinar this Thursday coming October 12th at 2 p.m. And you can check out all of our social media handles for the registration link for that. So, spots are filling up quite quickly. So I encourage you to join and register as early as possible. And for any more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So stay safe, keep investing, and we'll see you next time on the Bourse Report.